Yeah, good afternoon. Hope everyone is good. It is my time is 2017, which means it's just but 2 minutes. We're just gonna wait for you for our people to join us. Remember, if you're watching this video on YouTube, make sure that you subscribe to the channel and also you like the video. You know, it's always help us in terms of our algorithm, and even for the show, it's very good for us. You know, also, if you've got any question, feel free to ask on the session. Also, feel free even to ask even during the recording. Okay, welcome Ngubeko. How are you doing tonight? How are you doing? You know, I know it's winter. It's pretty cold. So yeah, and also I've noticed even on my side, network is giving a bit of a challenge because of load shedding. Yeah, but otherwise I'm good. I'm good. I'm ready to go. I'm ready. I'm excited, you know. I'm very much excited, not because of just trades, you know, they've been going on profit, but because we are doing this, we are consistent in terms of our sessions. Yeah, that is very important. That is very key, you know, to be consistent. Otherwise, how are you doing? How are you doing tonight? Unjani? Uyaphila? Are you okay? Are you alright? Alright. What is going on? Can you hear me on your side? I'm just curious if you are in the session because you just give me not much feedback, you know? Let's type mute. All right. Okay, as we wait for more people to join, I know a lot of times it's been about lead shedding. It's been about, you know, that actually having a problem with the connection and the network. All of those are a big problem, you know, these days. And I've noticed that a lot of people actually they always complaining about it. That is a problem, you know. Otherwise, tonight's session is all about reviewing what has been happening on the market. Remember, yeah, it's all about Millionaires Intelligence Institute. It's about adapting the way of thinking of a millionaire, the way you think, the way you do things, the way you take your trades. It's all about having patience. It's also all about just waiting for the proper setups, you know. Oh, okay, yeah, I think the network is the problem. So it's all about educating and empowering and making sure you're enriching everyone. The key thing is we want to have a group of traders that are independent, that can make money. It doesn't matter anything that has a candle. If you can analyze it, make money on it, you know, whether it's a Forex, it's a currency, whether we're talking about the indices, Nasdaq, your USD, your UK 100, your DAX, we should be able to analyze it, whether we talk about shares, whether we talk about cryptocurrencies, as long as there's a candle in front of you, we want to make sure you're able to analyze it, because that is where basically money is having the skill. Once you've got the skill, we know that the money will follow afterwards. We understand first thing first, the skill first, and then the money will follow afterwards. So that's why we've got all the entrepreneurs in our group. We've got entrepreneurs, we've got traders, we've got all those people to create so that we can create this platform. And this platform is to make sure if you join, you become part of a family. You are there in the community where if you have a question, if you got maybe there's a setup you don't understand, there's someone within the group who can assist you, whether it's a Telegram group or it's even over WhatsApp. I'm also available 24 hours a day because I'm also a trader. I trade the London session, I trade the Asian session. You know, I also trade the US market, but I only trade high probability trade because that's what I want, you know. That's the key to what the way we trade, you know. The game plan, I think I've done this, I've compiled this. The reason I compiled this is just for you to practice, because what is important is when you practice, then everything you become a second nature. You know, the way you analyze is gonna become a second nature, and then you start understanding that trading actually is just a skill. You know, it's all about practice, back testing. Even if you're not trading, you know, just take some time, look at the graph, look at the charts, just see how was your reaction on a certain levels, you know. And I should put this disclaimer that obviously there's a lot of risk that is involved in trading. So remember, the loss can be very substantial. So therefore, be very careful if you are trading. Understand Forex, futures, stocks, option trading is not appropriate for everyone because how we handle losses, our emotions are different, our mindset is totally different. So you need to make sure that basically you are able to handle, you know, the stress that come with it. Remember, I think almost every day I always share this. I always share the economic calendar. So if you're not aware, basically an economic calendar is a resource that allows traders to learn about important economic information, events, so such as the GDP, the Consumer Price Index, also the 9-farm payroll reports. So basically, you see all of these because these basically they affect the reaction of the market, which meaning these are somewhat we call economic data. It's almost like if a doctor they come to you and they ask you, okay, fine, how are you doing, how are you feeling? You give them the information. Once you've given the doctor the information, they definitely have to do some tests. So basically, that's what we do as traders. Okay, let me just go and check out what I mean because I need to show you what I mean. You know, so for example, today I think we saw there were a lot of news today. Yo, I think the firstly, I think obviously there was RPA hike. That's what's happening. We saw the interest rates going high in terms of the Australian dollar, and we did. I think we did share about it, and we even saw even the reaction on the Australian dollar. You know, it's always nice to see. Firstly, to see the news, and then you look at the reaction in terms of the candlesticks. Because why I'm saying the reaction, you can give someone else a news, but then what they do is depends how they interpret those news. You know, I mean, if for example, let's say in the let's just go over the Australian dollar so that maybe you get a bit of understanding what I mean by this. I mean, for example, 6:30 interest rate decision on B, right? There's a hike on it from 3.85 to 4.10%. You know, someone else will say this is good for the Australian dollar. You understand? But if the same information was received by the same traders, others say this is bad news. You understand? It's the same news, but because how we look at things and how we look at the market, same news, but we judge it differently. You know, this is like 20 increase, but someone will say this is good for the Australian dollar. Someone will say it's bad for Australian dollar. You understand? We look at it, it's different, and the way we interpret is gonna drive actions. When I say action, I mean that action is gonna be displayed where, okay? If people, if more traders are buying the Australian dollar, which means their interpretation, the way they interpret the news of the hike is that the Australian dollar is priced very low, which means they need to buy it. So hence you're gonna see the Australian dollar going up in terms of the price. Okay, I hope I'm making sense. Okay, if you go to over 0.5% PMI in terms of the pound, there was a bit of increase, which means basically there's a increase in terms of production in the UK. Same thing for Canada. At 4 o'clock, there was basically a decrease. Okay, but mostly I don't want us to focus a lot now on understanding fundamentals, because for you to understand fundamental, you also need to understand economics, which brings about a lot of things now we need to understand. So what I really want to focus is on the graph, on the chart, because the reaction, this is where we see the reaction. Okay, the news is there, but now how did most traders react to those news? This is where basically we see those reaction way on the charts. Okay, firstly, let's take a look at the Australian dollar. Okay, because that was the first news that we saw. So our analysis on the, when was it? I think this was on the Sunday. We did share that we want to see Australian dollar coming to this level and also coming to this level. And Is this level significant? Because here it's resistance and then it went up there, okay? So what happens on Australian dollar today mostly, which means for the most cause of the day, it was strictly bullish. Okay, you can see this movement. This movement was pushed obviously by the hike. Okay. Remember in our analysis, obviously we predicted as per analysis that the dollar is definitely going to drop. And you can see here, this is, remember, even before that push, you can see that the Australian dollar was definitely just ranging, creating a base. And then there was a bullish, huge bullish candle going up after that 25 basis point hike. And remember, right now, there's some talks that basically the Fed is definitely gonna now not gonna do any more hikes. They're gonna slow down of hiking interest rates on the US dollar, which is definitely good news, for a lot of people and also for a lot of companies, a lot of bankers, it's also good news, for a lot of consumers, they're happy about it. Okay. So let's take a look at this. So my expectation was that it's gonna come back to this level. Okay. But now what happens is here already, and looking left, when I say look left, I'm always gonna look at that level. This is what I call looking left. We're looking at that section. Okay. So the reaction here, what is the candle doing? You can see this here. The reaction is because of what is happening here. So what is this here? This is a base, okay? And you can see if you go below that level, let me just remove this so we can see clearly the candlesticks, okay? So a candlestick touch the level of a base, and a lot of people call this, obviously, they will call it, this is the order block, okay? I don't want you to confuse about terms. I'm mainly gonna use what I call a base, okay? Because I like it. I like that term, calling it a base. So from there, this was the reaction, right? So what you expect is bullish movement. Expect always going to be doing what? A retracement. What is this retracement? Is because we are take profits. Okay. After a bullish move, expect the market maker to take some profits. When you see a profit taking, obviously it's going to be this here. This is not like a bearish move. This is take profits from the buys. Okay. And you can see, since there's still that talks that basically the US dollar is not going to be increasing rates anytime soon, but I'm still expecting that obviously Australian dollar it needs to break through this level, and I think it's going to break through that level over there and go to that level. But what I want, obviously, is a bit of a pullback all the time. Always going to want a pullback. And yeah, a pullback to this level will be nice because you want to buy low. Remember, if you are trading, you want to buy low and sell way high. And this is where the movement of a bullish movement started. So chances are they want to buy again at the same level. For example, if you are buying something, let's say you bought something for 100 Rand and you go out there to sell it at about 150 Rand. If you come back again to the same market, you want to buy it, it's almost similar price, okay? That's what the market does. That's what the market makers always do most of the time. They're always going to come back to similar price where they had a biggest buy, coming back to that same level and start buying again. This is what I really would love to see, okay, this year. If they come back to this level again, it'll be a very good buy. Not a good buy, I'm saying a good price point to buy. Yeah. Otherwise, I think we've seen even some movement in gold. There's a lot of things that are going on in the market, especially SEC talking about Binance and all of those things. It's hectic, totally hectic. And as you can see, even here, the market has been not moving much in terms of, the gold. But I was really expecting gold to push to that level. And you can see right now, even gold is reacting to this base here. Okay, this base here. So this base here, remember there was a drop. Okay, this is a drop. Okay, and then after this drop, there was this candle. So what is this candle doing? It's a bullish candle, which means it's going opposite of the momentum of 1, 2. Then you got this kind of opposite momentum. So this is like a drop, and then this is a base, and then a drop. So this now acts as what? As the level of supply. Okay, as you can see, reaction in that base, and then a bit of a drop. Okay. But this base, as much as you see the reaction, see these spikes, they are touching liquidity in that level, because some people, when they saw this base, they thought the market is basically going to reverse and go further up. Because when you're looking left from this level, you can see this is what? This is a hammer, and this is a nice swap zone. Okay, let me just show you what I mean. This is a very nice swap zone, okay? So they're like, no, the market is definitely, when it comes to this level, reaching that level is definitely going to go. Let me just show you what I mean. It's definitely going to go up. So there was a bit of trapping going on that side. Okay. Like if it reaches yet, definitely going to go up. But now this was base. So from this level, there was, this now becomes like a supply from this level. But because where this drop originated from is this here. So I'm definitely sure this is not a very strong base. This is definitely a strong base than this one here. You saw reaction, but if you want to buy, where exactly do you want to buy? Normally, I like to use something that I call the Fibonacci. It is a Fibonacci anyway, not something that I call Fibonacci. Firstly, always going to change the candlesticks, change them into a line chart. Okay, so what I do, I mark the low, the high, and then I mark the low. Then I change the Fibonacci from there, pull to that level. Okay, so I'm expecting now this year to come to these levels. Okay, these are the levels that I'm looking for. Okay, where I like to buy. If I'm buying an instrument, whether I'm buying an index or I'm buying a currency, so I would love to buy gold at this level here, which is basically, I think it's around 1950 or 1948. So that level, that's a good level to buy. And then from there, definitely holding it on. So let me change this again to candlesticks. You can see this thing that is going on here. I don't know for how many hours. This is just a building up. These spikes are just building up, rejection. These spikes you can see is touching liquidity. It means potentially there are a lot of people that are trapped here that are basically going to be selling, but you can see the market is going to drop to this zone, and that's where I wanted to buy going further up. Obviously, if it doesn't do this, I'm obviously going to wait for reaction. Remember, when you do your analysis, you're managing your expectations, and you're doing the high probability setup that you want to see. So if that setup does not occur, you wait for the next one. The market always going to give you opportunities for you to trade. So I'm expecting this to come down to this level before I start buying again. And I am expecting gold to do like new highs, this year. Those are some of the expectation on gold. Because if you go and look at it in the daily chart, I'm definitely expecting from these levels, looking at daily, I am expecting gold to go to that level, to $2,000, then obviously do fresh new high, go above this high, but not anytime soon. We're going to be taking one day at a time. We're not in a rush. We take what the market can give us and then we go with it. That's basically my plan and my strategy. So this is basically a recap of the analysis we've done over on Sunday. So my expectation is that the gold come down here and then go further up, Okay. If you've got any pair that you want us to do analysis on, please do share on the charts box and we can definitely look it up. I think another signal we did send on the analysis was this one here, which was USD CHF. I was expecting obviously USD CHF to come to this level, but it had a reaction here, which is good. Obviously, this is another, you can see. Yeah, it's a nice setup. And obviously, today it made that drop. And then obviously we did catch that we sent analysis that the market is gonna react to this level, and we sent a buy signal. So we are buying to sell it. We are buying to sell it. You can see the reaction here. This was a nice level for buy, But our buying, as much as we are buying today, if you can look at this is a nice W, okay? And again, this side here, it's a nice candlesticks, obviously showing a buying opportunity. Okay, from there to there, then we bought towards this level of what supply. And you can see that reaction, that was there. It was a good, if you took this buy, obviously you probably made some good profits. So I will definitely expect the market obviously to do this again, retest. And from there, we can see we're not really, so I expect it to do this. Sometimes it might even go as further as that level, then dropping. Yeah, then dropping that side. Yeah, then dropping that side. Okay. Yeah, those are some of the expectation that I'm waiting to see, but we're not really in the rush. We want to see we want the market to come to us. We want the market to come to level. But the thing is, here's a tricky part. You see, 1, 2, 3. When you see those pins, 1, 2, 3, why is the market going to the same level 3 times? Is there something above it? Yes, the answer is yes. There's something above it that it might just react to it. So from that level, it might go back to that level before doing further drop. Even so, it might even go up there, passing 1, 2, 3. Okay. But what you want to do is, if you want a good point to sell, that is a good point to sell. And another level to sell is if it does give us a reaction on this level. But the nice level will be that level over there. Okay. If we see this movement going to that level, that means even on gold, that setup will be confirmed. Okay. I would love to see it coming there, and just a very nice confirmation for our buy on gold if it does. Okay. Because of this, because of these pins. See these pins right here. Since it did not go to that level. Sorry. Yeah. So that's the reason why I'm saying if they don't react to this because you have not touched that level, so they might even go further up the level, then do a drop. So from here, potential, these are some of the high probability. Remember, it might just do this. But what I normally do, I just watch. I just do my analysis and I watch, is the market reacting in those levels? Is the market going to react in that level? If it does react to that level and it goes there, it'd be a very nice level to sell. Okay. Yeah, and then US30, you can see US30 is doing this. And like I think US30, watch for the nice US30. It has been just not moving much, and you can see, looking at this, I don't know, for the past 8 hours, not much movement. You can see not much movement on this one here. But when you see this type of a candle, this type of a candle, more likely what happens here is that there was obviously a huge number one bullish momentum, and this year that is happening now is what I call take profits from those buys. Remember, there was a huge noise in the market. People, it was trending. I even saw on Twitter, I was like, yo, what is happening here? And I noticed that actually what happens is even you at the NASDAQ, see this movement here, a lot of bullish momentum, right? Bullish momentum, right? The market cannot just continue on buying. It needs to come back. So this year, this that is going on, this pullback is basically taking profits from those buys. Okay. What I would love to see, firstly, is that if the market come back, and indeed that come, okay, from there, let's do this, and so what I would love to see is that if it does drop to that zone, I think freeze. Okay, I think looking at H4 is just being clear. Okay, looking at H4, you can see a clear pullback. Let's just do this. Let's just use again. Let's change this to candlestick to line charts. Take that low, and then obviously that high. I just want to check using a Fibonacci. From this level to that level, where is my 50? Okay, my 50 and my 60 level. So my 50 and my 60 level is this here, right? So that is where I'm expecting what a pullback from that whole bullish momentum, okay? Which is right here, it's right here. That is where I like to buy it. Obviously, it's also, there is a flag. This is the flag. There's an active flag right there. So chances are the market, you know, these are some of my expectations. I'm gonna take that 5 and 11. If you don't have the settings, I can definitely, I don't mind sending them to you so that you can be able to have them also. The setting on the Fibonacci. Okay. So I'll mark this level, the level of 7. So I will expect USDT to do this. From this flag, react towards that level. Because you can see these candles, these white candles are candles that are opposites of the whole thing. What I mean by the whole thing, I mean, you can see after touching 33810, the market started like reversing. Okay, see these candles. Why is my thing acting up? We haven't touched the surface. There's still a lot more. See, black, and then 2 white candles. What is that? It's a base before doing a further drop, and then there was a whole lot of ranging markets. Okay, there was a lot of ranging markets for the past 8 hours. Okay, I'm expecting this year to do this. Okay, maybe to come back even to this level. So this level, this is USDT, each one, and then doing a further move up. Okay, that is USDT. Okay, let's just take a look at what's another pair. Just I want to look at the pairs that we've analyzed. I think we've done today. What else? Is it USDT or USD CAD? I think we did USD CAD. I think we've done USD CAD today. Okay. USD CAD. Even so, USD CAD is not much movement. I don't like when the market is doing this. It's just like doesn't give us much to work with. Because now when you see this, no question. Okay. This year I like because I just definitely I was expecting, since there was a drop you know, because since there was a huge drop on the, you know, I was just expecting this to go back up, you know, and just touch this level. Those are some of my expectation on the USD CAD. I expected it to come back to this level and then do a drop, you know. Yes, it made some move. If you go on a smaller time frame, obviously gave us good setup for a buy, but let me just check how many pips, because I think we bought after we saw this. There was a huge movement. How many pips? Only like 48 pips. It's good, but not good enough, you know, because what you see here, this is something that, you know, my former mentor used to call this a spaghetti. And used to say, you know, you don't trade a spaghetti, you eat a spaghetti, because what is this? You know, it's just a ranging market, you know, just moving within the range. You know, which range? Because it's just like moving within this level from there to there to there, nothing much. So you cannot make money out of this. You make money if the market actually move from that level to that level. That's where you see the money, because let me just check how many pips is that. From there, from buying from there to there, it's over 120 pips. So on the 0.1 lot, actually 120 USD, which is just over 2,000 rand if you are trading. And also 2,000 rand per trade. If you've got 5 trades, it's about 10K. So which is very good money, you know, for that pair. Otherwise, so yeah, if you go on a daily time frame, you just go on a daily. Just want to take a look at this. Yeah, daily. Yeah. So expectation on the USD CAD, judging by this year, there's liquidity. You know, when I say liquidity, what do I mean? There are some people who have placed their stop losses here. They are pending orders here. They are pending orders here. Why is this thing showing US? So, which means what am I expecting? I'm expecting USD CAD to drop towards that level. I am expecting USD CAD to drop towards that level. You know, taking out all of these liquidity from here. Remember, 1, 2, 3. Let me just show you what I mean. So these are some of the level where you've got people that are trading here. But people that are trading here, with their stop losses here on this pins. This is another W stop losses in this pin. 1, 2, 3, all these pins. So there's a higher probability of them dropping below. So I'm expecting this. I think it's the same thing I'm expecting even on EuroCAD. Okay. The same thing I'm expecting on EuroCAD. Is this making sense to everyone who's on the Zoom call tonight? Because I don't wanna like talk about something and it feels like I'm just like not making any sense. But I think I'm making sense. I think also Australian Euro AUD, you know, because obviously of the bullish movement on the, I think we've done this, and I think we did analyze this pair on May, and then we did show this here. If you go back to May, you'll see that we did some analysis on the daily that this is definitely gonna drop, but obviously the reversals on it, you can see there. If you're looking at this is a double marrow at this level here. I'm expecting this here. You can see this is a base. Okay. This is a base. Okay. There was a drop, black candle dropping, and then there was this candle doji in between. So this is a base, a drop, base. Let's have it before we drop further. Let's have a little bit of a meeting within the base, and then a drop. So this is a candle opposite direction of the bearish momentum. Okay, this is a base. Okay, I'm expecting again before the market doing a further drop, come back to the base. Okay, so because it's already here, I will expect this to do this. Go back to the base, and then if it's dropping further, drop even further. Okay. Is there a question? Good evening. Okay, everything is clear. Okay, perfect. Thank you. I like that. Okay. So let's just zoom in on that from the daily. Let's just zoom in. Okay. If you're zooming in, okay. If we're zooming in, this is our base. Okay, this is our base. This is our base. And you can see once the market start giving us this type of momentum, when I say momentum, when the momentum is slowing down now, it was dropping aggressive, but now the momentum is like dying out. For example, here, you start seeing a lot of candles that are formed. It means there was a drop and then a base and then a drop. So momentum start dying out. This means you might expect a reversal very soon. Okay, for example, this is a nice one because you saw like a nice M and a dropping. If you go on a daily, you see it very beautiful right there. So now I'm expecting is since the momentum is dying out, and you can actually see on the daily, this here is what I call a double. If you don't know it, as people call it a double marrow, or sometimes some people call it a railroad track. Okay, two candles, equal size, going opposite direction. So I'm expecting this to react those candles and then go further up and touch that base and then doing a further drop. Okay. Why is because if you mark this low, and just remove everything, and then you mark that high, okay, mark that low, mark that high, and then what do? Change this from line to line, and then you pull this from this low to that high, okay, all right. So there was a drop from there, reacted on that level. So now it's on the 50 level. You expect it to react on the 50 again Fibonacci level, and then come back to the base, and then drop even further, to these levels. So I'm expecting it to take profit from that level to be here. Okay, let's change it again back to and it's corresponding. Look at that. It's corresponding, and it's something that price action is very powerful. I like it. So these are some of my